Well, let's start with our stock of the day, HUB24, raking in $9.3 billion in net inflows so far this financial year. Total funds under administration on the heels of $70 billion, up more than 43% on the previous period. It's also moved to number one position in the annual Advisor Ratings Financial Advice Landscape Survey. And shares just ticking into, or more than just ticking up, it's up 3% in this morning's trade. So, Gary, HUB24, what are your thoughts?
So look, great result, but we are trading on 55 times earnings at the moment. So I think the consensus forecast is for like 85% growth this year, and then for another 45% next year. So it's obviously nice to see strong growth when you're priced for growth. But to me, it just feels like the stock is pretty highly priced here, but it is kicking the goals. So that's the positive. I just feel like this is it's a tough market here for high growth at the moment, and the stock is trading under its 50-day moving average at the moment. It's to me, it's more flatline and going through a bit of a sideways move. So I look at the stock there and look like, probably is going to sit between 25 and 29, looks to be the trading band here at the moment. So I think based on that high multiple, even though it's a good result, I think it's probably, the stock's likely to be stuck here between those two levels. So,
all right, when you say between 25, 29, it's at 26 at the moment. So you're saying you wouldn't be buying it?
You're close to the bottom here. So, right. You might be short-term trading. I think there's some stocks that are range bound and trading within the ranges. So things like Ramsay Healthcare and things like that. So, yep. But yeah, closer to $25 is probably, a reasonable entry here. But I don't think you should be looking too long here for, even though those good numbers, it is priced against some pretty, some high numbers as well. So I just think in this environment it's going to be stuck here.
Okay. Yeah. Mark?
Yeah, I'd echo Gary's comments there. Look, it's growth's it's not the most fantastic area to be in at the moment. I think the market's kind of going to provide you with some pretty consistent headwinds for quite a while. Look, this is probably one of my favoured growth stocks. This, say, zero, ordinate sort of thing. But realistically, they're not a huge amount of the portfolio at the moment because I know they're not going to run away on you, very quickly. So, and as Gary said, a lot's got to go right. 85% growth and then 45. So, I mean, there is obviously mass exodus from that financial planning sector, and this is probably going to be one of the ways that where basically those who are left are going to have to use a platform like this to basically be able to manage the amount of extra clients they're going to have. So yep. It's going to, but it's one of those things where I think their margins are relatively good at the moment, and I think once, because obviously they were competing against the AMPs and the IOOFs of the world, and I think it was a comment made by Gaurav Sodhi on the last time this came up on the call, was that these guys haven't started cannibalising each other yet within this sector, so margins may get compressed over time as well. So particularly if the growth is high. So yeah, look, but I've been trying to buy this on dips and expecting it to go far lower than it has, and it's held up fairly well. But for me, really, it's a watch list at the moment.
So a bit overpriced at this point.
Yeah, look, there's just too much risk. I don't know whether it's underpriced or overpriced, but being a growth stock at the moment, it's just I don't think the market's on your side necessarily. So
okay. It's always tough to buy the good stocks on a reasonable multiple anyway. So you always got to pay overs for them. Just feel like it's a wrong environment. That's all at the moment. So, but maybe. If growth gets crunched here a bit harder in the next 3 to 6 months, then maybe opportunity opens up,